halftime, the march to record highs. Is the rally based on fundamentals or solely on the Fed? And how should you play it? Bulletproof defense stocks, despite the looming sequester cuts. We have the names to buy right now. And the gap soars 40% over the past year. Will tonight's earnings keep the rally going? Two traders, one heated debate. Top of the hour, Carl. About 15 minutes away.
All right, Scott, sounds good. One big question these days is Twitter worth $10 billion? Dennis Berman, editor of the B section of the Journal, set out to answer that question in a column earlier this week. He says he tried to prove Twitter was not worth $10 billion, but the facts intervened. In response to that column, the editor of an influential Silicon Valley blog called The Next Web put out his own column, not just doubting the valuation, but also doubting Dennis's math. Here to talk that out, Dennis Berman, the marketplace editor, columnist of the Wall Street Journal, and Alex Wilhelm, the aforementioned deputy managing editor at The Next Web. Guys, good morning to both of you.
Carl.
It's a fun debate. And to your credit, Dennis, even Alex says you start out with a pretty good foundation. How did you start this argument?
I really was trying to prove why companies like Twitter probably didn't deserve the valuations they had. But as I really tried to gather as many facts as I could, and to be fair, there are not a ton of facts out there, but as I did gather the ones I could find, I kept saying to myself, you know, the opportunities for Twitter to do poorly, for it to fail, those outcomes are relatively few in number. The ways in which you could see scenarios where Twitter really has significant net margins, great operating revenue, and a significant trading multiple, it's not that hard to see 5 or 6, 7 different ways that they can get to a valuation of $10 billion or above.
You tried to look at a number at which its membership would flatten out. You tried to look at the danger of foreign competition. Nothing knocked you off of that perch.
Well, look, what happens 2 to 3 years from now, we cannot say. But we have to remember that IPO investors, they do not value a company on what its financials are, particularly internet companies, what its financials are today. They're looking 2 or 3 years in the future. And given the growth rate of Twitter, which was roughly 40% last year, if we assume that that comes down a bit, but that it really moves internationally, it is not inconceivable for them to have 500 million active users, say, by 2016.
Well, wait, Alex, just be careful. I would be very careful to say how people value freshly public technology companies. Look at the market reaction to Facebook's IPO. I mean, right before it went public, there was something hotter in the world. And even on its first day normal trading, its iBankers had to come in and prop it up. And then it suffered a precipitous decline. And this was its first couple of weeks of public trading. Once the shine goes off a company, once it becomes a real firm, the idea that it can be treated as a startup or an internet company really falls apart. So we need to think of Twitter not as a startup in any way, but as a real firm we can value on the normal market dynamics, you know, P/E ratios and whatnot. And that's, you know, something to keep in mind.
Yeah, of course, I'd say to Alex, though, that Facebook, of course, if you base it on where its revenues are for 2013, the price to earnings multiple is you know, through the roof, and remains so if you look at the earnings for 2014 and 15. So the market is basically saying, sorry,
it's still trading below its IPO price. I mean, even with those massive multiples. I mean, the point here is that late-term private valuations don't often reflect how the public market will react to a company. And that's kind of what we're talking about.
Yeah, we'll get to the public argument in a minute here. Let's back up, Dennis, to revenue assumptions.
Sure.
Where are we? Getting upwards of $1 billion? Close to $1 billion?
These are assumptions. And Alex makes a good point that we really don't know what the numbers are inside Twitter. The guidance I was getting from people I was talking to was the $800 million revenue estimate from eMarketer for 2013 or 2014 was probably accurate, but the number that I was hearing was really closer to $1 billion. If you take the net margins on that, let's call them naturally, organically, when there's not a huge investment phase, they can get to 30% margins. Man, you got a great business, Carl. And I don't know if Alex agrees or not, but it's an automated business. We give our content for free. Advertisers put in their ads for free. Geez, it can be a money machine.
What do you think, Alex? You say 40% margins sound a bit ridiculous in your view, but say you give Dennis's half of that.
Well, Twitter's a very valuable company. I think me and Dennis both really agree on this fact. I mean, no one disagrees that Twitter's not an amazing firm. I mean, it does have great margins. It has great engagement. It's been around for, you know, a half decade, so it has, you know, staying power, which is a problem for some internet companies. The question is just how many billions of dollars is it worth? And my argument, which is not politely put per se, was that we don't have enough real hard information to put a firm valuation on it. So to quibble about, you know, 10 billion, 12.5 billion, which Dennis got to, or 9 billion or 8 billion, I mean, it's kind of just talking into the air. We just don't have the facts and figures to kind of get to a firm number.
Right, okay. Sorry, go on, Carl.
I was going to wrap it up, how do you think the story's going to end if and when they come to the public market? Alex, will this be well received?
Yeah, I think so. I'm actually very optimistic about the company.
And Dennis?
Hey, I rest my case. He agrees with me. Look,
Right.
we're all doing it on some abstract numbers, but overall,
Yes.
I think the fundamentals are good.
It is a great debate. I just tweeted, I CC'd at Jack, so maybe they're listening too. We'll see.
We'll see.
Guys, appreciate it.
Thanks.
Dennis, Alex, thanks a lot.
No
When we
worries.
come back, as markets inch toward those all-time highs, we're showing you a new way to invest. Startup Motif Investing, backed by former Microsoft execs and SEC officials, is taking the idea of do-it-yourself investing a step further. We'll find out how when we talk to the CEO after a break.
I'm Ron Kraszewski, Chairman and CEO of Stifel. 15 years ago, we embarked on a strategy that nurtured an entrepreneurial culture and our commitment to building the nation's premier financial services company. With one of the industry's largest